Gold is shining. It has already broken new records in the world of currencies. This year, in terms of the US dollar, the price of an ounce of gold tested the $2,075 level 3 times. In the past 3 years, it hasn't been able to surpass this level. Will it break this $2,075 level? When will it happen? We'll try to answer this question and more in this video. Let's get started with the market and current affairs review. You know, when I started this channel, I explained why I like to have gold in portfolio baskets to some extent, but during the fluctuations of gold, we occasionally reduce or increase the amount in the basket, sometimes adding silver, sometimes increasing platinum, and so on. Why? Because the direction the world is heading, the problems America can't solve, the problems it will create, and the wrong fiscal policy in the transition to a multipolar world, we shouldn't waste time choosing other currencies. We told that having some refuge in the world's oldest currency will have a long-term protective effect on portfolio baskets. In this direction, the market is evolving, giving levels and periodic movements. We also provide short-term trade levels and explain suitable atmospheres for long-term physical quantities. For example, you remember, while China was on vacation 2 weeks ago, when they pushed the gold ounce down to $1,800, we said not to miss this great opportunity. It moved more than 10% from there, closing above $2,000 on Friday. You see, we've been talking for months that this would happen even if a war hadn't broken out. Some dear followers asked me, "Are you Nostradamus or a fortune teller?" And others call me a doom prophet, or mention conspiracy theories. Friends, I'm none of these. I'm truly an analyst who reads history a lot, tries to analyze developments, and has been trading almost all products in these markets for years, trying to understand how products move, what they move based on, and how macro scenarios vary. So, when you look at all these things, there's actually a very clear picture in front of you. But some people who don't want to see this picture sometimes try to deceive you with short-term fluctuations for their personal interests. These products are protection elements in your basket. I remind you once again. On the other hand, we've been telling for months that Eastern central banks are persistently emptying American bonds and buying gold instead, that they're buying physical gold. And you see in the chart that since the fourth quarter of 2014, that is, in the last 9 years, the sale of major American bonds worldwide has reached $444 billion, and the increase in gold positions is $816 billion. This chart is so clear. We've been telling you for months. They're selling American bonds and replacing them with gold. You can say they changed the situation. The situation changed after we said it. So, I think I deserve a little respect on this subject because I insist on it. Because I also received some negative reactions about the interest in gold and silver. Friends, these are protective elements in your basket. Let me remind you once again. On the other hand, Eastern central banks insist that they are buying gold, and not American bonds. We see that the sale of major American bonds has reached $444 billion and the increase in gold positions is $816 billion. You see, this is the clearest evidence. We have been telling for months that long-term trend. Thus, we're trying to explain how important it is to take refuge in gold and silver, especially against the risk of the single reserve currency, which has become vulnerable in the face of wrong fiscal and monetary policies and under the changing circumstances, and how long-term protection will be achieved in portfolio baskets. We keep telling you the latest developments and what's happening in this direction in our videos. For example, we've been talking for months about how interest rates will continue to rise, and how wrong the statement, "Nothing will happen to gold," is. Brokerage firms that wrote reports on $1,500, $1,600, $1,700 have now changed their estimates, as you can see on the screen, and they now have estimates ranging from $2,050 to $2,500 for 2024. All brokerage firms and international institutions have started to give estimates about gold. None of them were at these levels, and they all revised their views. Some will say, "Conditions have changed. We told you beforehand that conditions would change." So, a little more respect for me in this regard. I think I've earned it, because I insist on this. We've been insisting for months that the world's leadership is now under threat, and that in the face of this risk, the oldest currency in the world, gold and silver, is a refuge. We can see that central banks of major countries worldwide are behaving in this direction. In the same table, we see that the sale of American bonds has reached $444 billion and the increase in gold positions is $816 billion. Again, in this table, we are looking at the products that have had the highest returns in the last year. In the last year, of course, orange juice, which we have talked about on this channel in the past, sugar, and cocoa have had the highest returns. But gold and silver are also among the top in the last year. Despite all the pessimism, despite all the beating, they are at the top. I believe that this positive contribution will increase further in the coming weeks, and I think it will go up in the list. On the other hand, the most important table this week is actually a table showing the percentage of how many of the largest companies in America have higher interest payments in their cash flows. The table is divided into S&P 500, the largest 1,000, the largest 2,000, the top 3,000, and so on. You can observe the gradual increase in these percentages, especially in the largest 3,000 companies marked in green. As we move outward from the largest companies, we can see that their expenses and interest payments have reached a significant percentage in their cash flows. This means that these companies might be heading towards bankruptcy. Even the largest companies, while relatively more comfortable, will also face difficulties. As we move further out to the overall economy, the general economy of the United States, we see that the high interest rate environment is the real problem. I've been trying to explain this. There was no possibility that the consequences of raising interest rates quickly would not happen. So, it was a problem when they kept the interest rates low for a long time. When they did this, they could try to temporarily suppress inflation, and they might succeed, but it would lead to bankruptcies and systemic problems. It has already begun to happen. These are the pictures we saw in advance, so don't forget this table. We will soon see how the high interest rate environment will create major problems for companies throughout the United States. Moreover, I came across an important report that caught my attention, prepared by Pam Martins and Russ Martins on October 24, 2023. In this research report, they mentioned the possibility of a $20 trillion run on the systemic banking system based on a financial stability report released by the Fed. You know, if there's a bank run, meaning a rush to withdraw deposits from the banking system, it's a problem. Such a movement began this year in March. Then, the banking system was supported, and banking shares have been taking a beating. I analyze all of them, but I can't find anything to recommend, as I still see them as so low that they can't be sold. I see them falling further. So, there is a significant problem in the United States system, and bank runs could become a major issue both in the US and in the global banking system. We will closely monitor the banking problem. Furthermore, I noticed a report about silver, especially with regard to the surge in demand for silver in 2021 and 2022. This surge has led to a supply shortage. According to data published by the Silver Institute, there is a deficit of 7,393 tons when comparing the supply and demand for silver. In fact, there's an interesting situation here. If you add up 2021 and 2022, it's the first time in the last 11 years that silver is in deficit. It used to be in surplus, and there was pressure, and prices were lower. However, particularly in the last 2 years, it has started to fall into deficit. Therefore, it seems like it's just a matter of time before silver faces a significant supply shortage. I suggest we keep a close eye on this. As for gold, it is shining. It has already broken new records in terms of all the money sciences on Earth this year. In dollar terms, gold has tested the $2,075 level 3 times this year. Can it surpass this $2,075 level, and if so, when will it happen? These are the questions I will attempt to answer in this video.